true wealth is God through knowledge. If you haven't watched part 2 of our series Inflation and Investment Vehicle, you can check it out above there. Yeah, and if you've done so, this is the right video for you. So let's get started. Previously, we've seen how inflation has performed over the last 50 years. Now it's time for us to see how different investment vehicles, the likes of stocks, real estate, and gold, has performed in relation to inflation over the last 50 years. Before we go into the proper investment assets, there's an element I want us to consider. Of course, it doesn't be categorized as an investment vehicle, but it always comes on in conversation concerning inflation. So which is the devaluation of currency, in specific US dollar. If you track back 50 years ago, in 1 naira was approximately $0.6. What it means that a million naira is approximately $1.6 million. If you go back a bit, let's say in the last 30 years, $1 was approximately 22 naira. So this has based the US dollar to be in the conversation of investment assets. This means that 1 million naira converted to USD 50 years ago will give you about 2.2 billion today when converted back to naira. But when inflated, it will give you about 1.37 million. This has not only preserved your 1 million naira 50 years ago, but has given you an additional 370k in addition to your 1 million naira. 30 years ago, 1 million naira converted to USD and converted back to naira today will give you about 66 million naira. When deflated, this will give you below a million naira, about 855,000 naira. This means that your 1 million naira 30 years ago has not been preserved to be 1 million naira. Rather, based on inflation, this year is below the margin of 1 million naira. 5 years ago, 1 million naira converted to USD and converted back to naira today will give you about 3.6 million naira today. When deflated, this will give you about 1.38 million naira today. What it means that your 1 million naira purchasing power has been preserved, and this has been possible because of 1, the devaluation of the naira, and 2, the strengthening of the dollar. Now let's look at the major investment assets. Real estate. Now this is one of the toughest to evaluate, as there is no standardized amount of appreciation over the years, but rather we can only get different information from different people. So what I did was to gather testimonial from different person and put this together, evaluate it, average it, consider other areas that are not as do not appreciate at this rate compared to other ones that you are seeing on the screen now. Aggregate it to get an exact figure that we can use in determining the growth of real estate in Nigeria over the years, right? It's different based on different locations. In Lagos, it can be extremely high. In places like Zamfara, it can be like absolutely 0% increase. So we want to look at all those things and average it, which is what I did. These are my assumptions. The land banking has decreased averagely of 11.9% over the last 50 years, an average of 12% over the last 30 and 20 years, average of 15% over the last 10 years, an average of 25% over the last 5 years. Over a few years, like, we see that there are a lot of intensity, or there are a lot of purchasing and valuation in the last 10 years on real estate, which people are driving the demand of it to go way higher compared to previous years. And this has made the valuation of the last 10 years, last 5 years, a bit higher than those of previous years. With that assumption, it shows that 1 million naira invested 50 years ago will give you about 276 million. But when deflated, this will give you about 172,000. This means that inflation has eroded the purchasing power of that 1 million naira to about 172,000 naira today, even though in actual investment, the money is about 276 million. 1 million naira 5 years ago will give you about 3 million naira today. When this is deflated, you'll still be able to give you about 1.6 million naira. So this has not only preserved your 1 million naira to be 1 million naira, it has given you an additional 600,000 naira extra. This assumption shows that investment in real estate in the recent years has been more profitable in terms of retaining your purchasing power than investments in the last 50 years. In Nigeria Stock Exchange, based on the available data, I was able to get data for 20 years and for 10 years. In the last 20 years, it has done averagely about 13%. In the last 10 years, it has done averagely about 13%. And in the last 5 years, it has done averagely about 28%. So I use this and then backtrack it. So in the last 50 years, I used an assumption that it has done averagely of about 12.9%. So this means that 12.9% on a million naira invested 50 years will give you about 431 million. This also means that 28% invested 5 years ago will give you about 3.44 million. But this is without inflation. 431 million naira deflated will give you about 265,000 naira as of today. This means that inflation has eroded majority of the money. In the recent years, the case has been different. 1 million naira invested will give you about 3.44 million. 3.44 million deflated will give you about 1.32 million as of today. It has not only preserved your 1 million naira, but also give you an extra 320,000 naira. Now you have to understand that there are outliers. For every investment vehicle that I mentioned, there are people that invested in these asset classes have done extremely well. There are people that have invested in real estate and have invested in million naira, gotten billions of naira, and there are people that invested in one stocks or the other stocks and have done extremely well, way beyond what inflation can contain, right? While there are also people that have invested in million naira and done badly. So what I'm doing is to take these two polars and average it. We make an assumption out of it. Example, in 2007, the Nigerian stock market did about 72% or thereabout. In 2024, they did about 36.7%. And even this year, it has gone up about maybe 40% or more, right? So what this means is that there are certain years or certain cycles within the whole decade where stock market or an investment asset do really well. Because there are one period where there is a lot of demand for it, and because there's a lot of demand, it created a surge or that huge price grab. Now let's go to the global asset classes, which is investing in US stocks and gold. If you compare the global asset classes with the likes of investment in our Nigeria stocks or investment in real estate, you'll notice that it hasn't really done really well in terms of performance, but in terms of the valuation of the currency, which made them have upper hand. So what this means is that not only as investment in US dollar giving you a percentage, the devaluation of naira and dollar has given it even much more edge. What does that mean? In the last 50 years, if you look at the US stock market, it has averaged about 8% thereabouts, which is even lesser than the Nigeria Stock Exchange or lesser than the real estate assumption that we made. Also in the last 10 years, it has averaged about 12%, and in the last 5 years, it has averaged about 17.5%. But if you compare all this return to the equivalent of what we have in the Nigeria stocks or real estate, you know that it has not really done extremely well. So investment of $1 million 50 years ago as of today will give you about $66 million. When this now deflated to our currency today, your investment will be about 66 million naira. So this has not only preserved your 1 million naira invested then, it has multiplied by about 66 times. If you look at the recent year, I put an investment return of 17.1 million naira. So it means that 1 million naira invested 5 years ago will give you about $6,000 today. $6,000 converted and deflated will give you about 3.48 million. What this means that 1 million naira has been preserved. And not only that, it has also been a multiple of 3 times. What this shows you that in terms of the percentage itself, there hasn't been so much happening in the US market compared to the Nigerian market and real estate. But in terms of devaluation and the economy as a whole, there has been several advantages of investing in the US dollar compared to our Nigerian currency. And I said investing in US dollar asset classes, not necessarily converting your money to its currency, but finding an asset class to put your money into. Now let's look at gold. Similarity happened to investment in gold. Gold on average has done about 8% in the last 50, 30, 20, and 10 years. But in the last 5 years, it has gone about 15%. What this means that 1 million naira invested in gold 50 years ago, put under the rate of return of 8%, will give you about 73 million naira as of today. What this means is that investment in gold with the base currency in US dollar are not only preserved in 1 million naira, but also has made it a multiple of about 73 times, which is huge. If you look at the rate of return of 8%, it's not so much, but if you then look at it in addition with the currency devaluation, which is what gave gold and US stocks their edge over Nigerian asset classes. So investing 1 million naira in gold in the last 5 years at the rate of 15% will give you about 3.2 million naira today when properly deflated. This means that investing 1 million naira in gold in the last 5 years will not only preserve your money, but also make it in the multiples of 3. From this whole conversation, you discover that the valuation of currency and currency strengthening has been the one or major factor that give global asset classes edge over the Nigerian asset classes. This connotes that as long as there is no more economic craziness or uncertainty, and there is stretching of the Nigerian currency, provided these are constant, Nigerian asset classes tend to be much more valuable than the global asset classes. But you never can tell. In conclusion, what does it mean? It means that there's supremacy of second. When fear is the market, gold wins. When Naira devalue, global asset wins. When economic reform is, the Nigerian stock market wins. When Uber demand surges, the real estate wins. And when innovation compound, US stock market wins. What this means is that as an investor, you must diversify and look at different asset classes and see how you can diversify your fund into different asset classes to be able to give you proper return. As there is no one single asset that is the supreme or king of all in all cases. When the demand for an asset class drop, the demand doesn't isolate, rather it goes to another asset class. So you want to be in a position where you diversify enough to be able to take opportunities in different asset classes. I hope this was helpful to you. Till we see again, stay safe and invest safely.